Camera for Canada's Mortgage Minute. We had talked previously in a segment before about variable mortgages and benefits, that sort of things. And recently, with the Bank of Canada announcement last week that they're going to leave the rate stay put, at least as far as the Bank of Canada rate. It's the first time in about a year they haven't said anything about a rate going up. It looks like they are going to leave it steady. Variables, once again, may be a really attractive option, especially when the spread between them and the 5 years is growing and growing. We've almost got a 1 point spread between them right now, as we've got some variable lenders offering rates as low as 2.45%. Now that's a fabulous rate when you compare it to 5-year fixed money, which is hovering somewhere around 3.45, 3.6, 3.8, depending on the lender. So there is some variations out there. However, the key to remember with a variable is that the qualification is different, especially when your mortgage is an insured mortgage, in other words, one with less than 20% down. At that point, you have to qualify on the Canadian benchmark rate, which is 5.34%. So what does this mean to you? It means that qualification's tougher. Its variables are not going to be for folks who are at the edge already, whose ratios are already pushed. If you want a variable in that situation, it's going to force you to buy less home. Basically, it'll scale back your approval requirements. At the end of the day, you can have that variable option, but again, like I said, they will be restrictive on how much you can afford. Not that that's the rate you'll pay in the long run, but that's how the government wants you to qualify, because their motivation in all of this is they don't want you to be severely impacted by rate spikes. So what to do? Well, there's another option out there if you're looking at a variable as an option, is we could do what's called a hybrid mortgage. That's right. We can do a combination of a variable and a fixed. So it's one of those where you can have your cake and eat it too. If you were worried about the market rates increasing, well, you can take the certainty of a fixed mortgage and couple that with some risk. You can take a little bit of risk and say, look, you know what, I'm going to hedge my bets and see if I can save some money, put part of it into a variable. We've got the option of structuring it any way you like to, but traditionally what we've done is a 50-50, where half of it's gone in one and half of it's gone in the other. It's a really cool product because it allows you, like I said, a lot of flexibility, certainty, but it also offers you some savings. Now, if you want to stay strictly 100% variable, we have some other attractive ways to mitigate the risk on that as well. Basically, we can hedge the payments. We can make sure that if there is rate hikes and spikes, you're not going to get dramatically and severely impacted by it. But by all accounts, it looks like things aren't going to go anywhere anytime soon. So if you need anything mortgage-wise, want to learn more about these options, don't hesitate. Give us a shout at the Auxilium team. Auxilium, as you know, means to care, aid, assist, and support, and that's exactly what we do here. We look forward to helping you.